Happy Monday and Happy New Year, traders. Thanks for joining me. It's 8 a.m. Chicago time on 3rd of January, 2021. This is episode number 2143. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Wishing you a tremendous 2022. Hopefully smashing through some serious barriers and achieving some big goals. This morning, the market was a lot more risk on than it is now. The S&P is up 16 points, 35 basis points. The Dow Jones is up 30 basis points. The NASDAQ up 37 basis points. And the Russell up 48 basis points this morning. Nice little pop. We do have an internal gap from Friday's close on the S&P. Settlement on Friday was 47.58, 58 quarter, something like that. And we're at 47.75. So we were at the high, we were at 47.91 and a quarter in the S&P. The NASDAQ high at 16.452, which was the all-time high at the beginning of November. So you can see the NASDAQ's a little bit laggy there. Europe is strong this morning, up 83 basis points in the Euro stocks and 107 basis points in the DAX. No earnings today. It is the first trading day of the year. Welcome back. I expect that January is going to be a firecracker. So we'll see how it goes. Interesting December. We made new all-time highs. We finished the year very strong. I'm going to rattle off the returns as I summarize them for convergent trading. In fact, let me open this up in a new tab and show you that. Here it is. These are the returns on the cash indices based on closing prices or closing prices for the year. So you can see the S&P 500 index 26.9%, just a banner year, 2021. The NASDAQ up 26.6. The Russell is and has been the laggard. We've talked about this, how the Russell's just been on this, has been falling behind and has been on a downward channel as the S&P was making new all-time highs. Still a good trade. And the Dow Jones Industrial Average, on which the Dow Jones E-minis E-mini futures are built, are up 18.7% for the year. So just an outstanding year. It's looking like there may be some interesting overhangs coming into the year. We'll talk about those day to day, and we'll see which ones are likely to impact how things flow on a macro basis. Today, we do have the market manufacturing PMI final. This is a low tier number. The big number today is the Chinese Caixin manufacturing PMI for December. This is a high tier figure. If you're trading the Nikkei or the Hang Seng or something at 8:45 p.m., be aware of this number as it is a mover. Again, first day of the year, we had a pop-up across the indices. And now the market has pulled back. Most products have pulled back and dropped. Notice crude has actually breached a 75 level. Crude pushed into 75, which was our target from 4 weeks ago. And it got it a week and a half ago or so. And the next area of resistance was 77.02, which was a key swing low. It pushed to 77.40. Or something like that, 77.45, and crude has come off more than $2 now, about $2.50, and is actually moving into the lower balance. So crude is on an interesting trajectory. The next level down is around 77. Next major level down is around 77. Silver's off today, 266 basis points off, and so is gold. So are gold and copper. The market looks to be setting up for a pretty interesting open here. Crypto have come off. They've tested from below. Bitcoin's tested from below, 52,000 from below. and has come off over the last few days and has taken a pop higher today. Nice little pop by Ether there. That's the overall picture. Notice the rotations in the gray box in front of you. The rotations have dropped. The ES has dropped from 9.25 points on a 1 minute harmonic over the last 20 sessions to 7.5 points. That is quite volatile, actually, but it is coming off. We did have, it's an end of year trade. We did have rotations kind of collapse a little bit, the volatility drop a little bit, but take note of these rotations every week. They're changed every Friday. I don't update them more than once a week. My stops, targets, expectations are built on these rotations. They're statistically based. They represent the one standard deviation or one normal move, one sigma of the ES high and low swings. Notice also the range has dropped from about 48 to 45. And so those are things that are giving us an indication of how much risk and what kind of size we should be trading. The S&P has a multi-distribution profile, has tested higher, but has come back towards its overnight point of control. The S&P is trading at 73.75. The overnight point of control is 77.50 with a range of 91.25 to 70. So about 20 points of range, which is relatively normal. Volume is back. We were doing something like 83 or 92 thousand contracts at this point last week, which is understandable given the holiday, but volume is back. It's at 157,000. So, and a note that the normal overnight volume could be anywhere up to 263,000. The most common is 228,000. So you could see that we're way off of the most common. And the normal range can be as high as 33.75, which has gone down a little bit. And what's normal is 23.5, and today's is 20.5. So relatively normal range for the day. Nothing significant tested or breached overnight. The key thing to note about the S&P is that it is really not moving away from the all-time high. This is what we did on Friday. We basically opened, we sold off on Thursday. Friday, we popped higher. Very low volume on Friday. I think it did 600 and something thousand versus the expected 950,000. We popped higher, and then we came off below the range. We extended the impulsive move down from Thursday's close. We extended it down as expected, and then just traded sideways. I was not here for this. I didn't really trade this. What was interesting on Friday is it made a run. It did not take out the IB stat the entire session. It traded the entire session without taking the IB stat. Who knows what the IB stat is? Let's do a quick pop quiz. Why don't you tell me what the IB stat is for the S&P minis, and we'll see how many of you are paying attention. But it went to 78.25. The IB is 78.5. And then in that last bracket, in the closing bracket, the last 30 minutes of cash, it crossed the entire range to extend the IB down and put in a lower low on the close. So relatively weak on the day, very strong for the year because it has not the high of the year was 47.9975, pretty much up against 4,800. And here we are closing at 47.58, which is about 40 points, 42 points below that. This is a very strong close, very bullish close for the index on the higher time frame as a whole. And here it is. It's closing weak on the day, but we cannot put, even though the day time frame is ours as day traders, we cannot put that much stock into this fact because it is the end of the year. It looks like profit taking, liquidation into the end of the year. I know that today is a holiday in Europe in some places and so on. It's Boxing Day, I think. I think. Or is that after Christmas? I don't remember. But I know that a lot of people are off on Monday, including a couple of my news feeds. And so it's very quiet trading. But we opened, we gapped, and now we're trading up at 47.76. So we're trading right in here against the overnight high coming into Friday morning. So we're back basically, as it stands right now, we're back to normal. We're back to where we were. We are resuming the auction from last week. You can see the delta got hit on the close, relatively aggressive selling. The IB stat, the IB stat is statistically speaking, going back 2,500 trading sessions, that's 10 years. So quite a substantial and high confidence interval for that statistic. Historical probability of the initial balance high, the yellow line here, or the initial balance low being broken, not touched, broken by at least a tick is around 97%. 97% by the end of the session. So we expect the market to take out the first hour's high or low approximately. Historically, I shouldn't say we should expect it because it doesn't project forward. This is a historical probability. I don't want to confuse you there. Historically, it has broken that first hour's high or low by about 97% of the time. So this is a significant statistic. The overnight stat is about the same. It has been dropping because the overnight session has been quite volatile. We've had a lot of ranges in the overnight, and then we come in during the day and it's relatively silent. So the overnight stat has dropped a little bit, but it's still around 95% of the overnight high or low are touched, not broken, touched during the day session. So these based on that, we can create some biases and we can create setups to take advantage of that historical probability. The outcome's always 50-50. We don't know if it'll happen today or not. We don't know where that 2% for the IB stat or the 5% for the overnight stat, where that shows up in the data set. So the outcome's always 50-50, but the historical probability is very high. So you can see that this was not being accomplished on Friday until the very last minute. Okay. So that's the big thing I wanted to point out. Looking at what has happened today. So we have a big internal gap here. So you can see between settle, which is way down here at 47.58 and a quarter, 47.58 and a quarter, between settle and today's open, there's an internal gap of approximately 14 points, something like that. And we immediately went higher, consolidated in the Asian session, and took out the high during the European session. The European session opened and it went strong to the positive bias. Look at where it ended up testing. It ended up testing this point of control that we, basically this naked point of control that we left behind from last Thursday before coming off. I don't see any significant news or any market moving news as a result of this. The market has moved back. If it is on news, then the market has come back to the scene of the crime, or what I call the SOC, the scene of the crime. It came back, and the auction is essentially resuming in balance into today, and we are right here against the overnight point of control. So expecting, what does all that mean? We're expecting the market to open on the high end of Friday's range. We're expecting it to open in range out of value, and we're expecting it to open on top of the overnight point of control, just below the full session mid, which is this little line, and just below the full session VWAP, which means that it's likely to be a noisy open. So we're going to watch which side takes control early on, because we're opening pretty much in balance against the overnight session, and on the high side against the against Friday's session, and on the low side of balance against Thursday's session. So what we have here is If there are kids in the room, cover their ears. What we have here is what I call in my prop shop a shit sandwich for an open. It just is. We're kind of compressed in between these levels. We're opening on top of balance. We're opening around VWAP mid. It's likely to be kind of a messy open. I'd like to see it drive from the open. I'd like to see it drive down from the open and get us to do some spring cleaning below. We have a lot of weak structure below, but it's not what I want to see. You could see that the delta is relatively positive still, despite the selling. So there's still an aggressor skew to the buy side coming into this session. Real quick, I know I'm talking a lot because this is the first broadcast of the week, and generally I cover a lot. I want to bring your attention to a couple things. In terms of earnings, there isn't all that much going on until Thursday. We get Bed Bath & Beyond, RPM International, and stuff like that. Walgreens, I believe. But this week, in terms of major releases, like I said, we have the Cakegen manufacturing PMI for China, an important number, expecting 50, right in the center, expecting 50 today. And then we get the inflation rate out of France tomorrow. We get the unemployment change from Germany. We get ISM manufacturing tomorrow as well from the US. That's a significant number. The JOLTS job openings, which is at a record high in the US on Tuesday. So Tuesday has relatively significant numbers for the US, both at 10 a.m. Eastern. Wednesday, we get consumer confidence out of Japan, inflation rate out of Italy. ADP comes out on Wednesday morning. The FOMC minutes come out at 2 o'clock. On Thursday, we have the inflation rate out of Germany. We'll be paying attention to that, expecting 5.2. Balanced trade of the U.S., not really a mover. ISM non-manufacturing, not too much of a mover. But Friday, we have non-farm payrolls and unemployment. So between the FOMC minutes on Wednesday and Friday and the sprinkling of inflation rate releases and so on, this could be a pretty active week. And then we get into earnings the following week, later in the week and the following week. We get into Q4 2021 earnings, okay? A quick look at where we ended the year. This is the VWAP, the monthly VWAP right here. Forget the part that pokes higher because this is an all sessions chart, and so it resets at the beginning of the month. But you can see some really excellent separation in the ES, quite bullish closing the year. Same in the Dow, same in the NQ, although the NQ has been really flat. And the Russell really could not get any separation from its VWAP, just slight. But the Russell peak is so far behind its peak that you could tell that the small caps are not getting much love. Looking at the bonds have started to move away from their monthly VWAP as pressure on interest rates continues to increase. But really, it's not trending. I mean, the bonds have been in this massive balance as the world's screaming inflation, inflation, inflation. The smart money is not buying that story, as Jeff Snyder covered. Same in the notes, right? They're finally breaking to the downside, but really, they've spent the last 2 months completely in balance. So that's where that stands. The crude has tested the 77 level back here. You can see it found resistance up there. The initial resistance is right here between 74, 75, and 75, which we pushed up against, and now we're kind of breaking through. Okay, so that's the big picture. Let's take a look at what's expected for today, and you guys can run off and prepare for the open. Okay. It's a lot to cover, right? There's a lot to talk about. I feel like I'm like an auctioneer at Christie's or something. Here we go. So we're opening inside of the major balance from this overnight session. We're opening right at the edge of Friday's range. We're opening below the MC point of control in this region, which is 47.83 and a quarter. We're opening below the balance of Thursday. And then we're opening above the balance of Friday. So we are in this really squished area here. So I'm expecting a volatile up and down session, open, and then I'm expecting this market to take a direction. To me, it looks like we're mildly bullish, so I'm going to stick with that narrative given that we have all this support potentially from Friday below us. I'm going to look for it to break higher and test the overnight stat to the upside, 47.91 and a quarter, and bring us back into Thursday's range. We made an all-time high on Thursday, and we're likely to challenge Thursday and hold steady. I'm not expecting an all-time high again today, but anything can go at this point in the year. There's a lot of money still sitting on the sidelines, trillions of dollars still sitting on the sidelines, looking for value and looking to buy. So secondary open auction in a noisy environment, an attempt to push higher, that's finds sellers, comes back to the overnight point of control, and it drops through the overnight low, giving us the overnight stat. And now we are making a run for the prior settle stat down at 47.58. 58 becomes a key target. 58, let's put that in here, becomes a key target on any drop. That's going to be the number I'm going to hold a short for, is 58 before we get a bounce. It might break through, might break this low. We had been started to one time frame down on Friday on the daily. On the weekly, we're one time framing up. On the monthly, we're one time framing up. But the daily on Friday showed weakness, so we may see a little bit of a test down this morning. How's that? So we're opening in balance, and we might check higher or lower, and you might be sitting here going, well, this guy is a genius. The market might go up and down. It doesn't. I don't care that it's obviously going to go up or down. That's kind of given. But the question is, what is the more likely play, and which areas are important so that I can hold on to my trade, as opposed to, hey, I'm going to get long, and then as soon as it starts to wiggle, I'm the weak hand and I'm closing the trade and running off instead of extracting what I can. So if I'm going to get long, I'm going to look for the overnight high at 91 and a quarter, potentially a push right into 47.95, so 95 up here. And if I get short, then I would want it to break through the overnight low. If it breaks the overnight low, which would be my first scale out, then I'm looking for 58. I'm going to hold for 58. That's what I'm expecting. Does that help? Good luck. Happy New Year. I'll catch you tomorrow. Take care.